Staking is a lot like mining, to where you put up something and you get a reward in return. In staking, you put up your money and you lock that in.
Hey, I'm Rebecca. Welcome to the Mamalorian Way, where we get curious and stay curious about entrepreneurship, money, and finances. And today we have Carlos Benavides with us, who is a self-styled crypto DeFi expert. When I get to see you, Carlos, and talk about this the hour before, I enjoy doing the research about all of this stuff because it's definitely not something that you can hear once and understand. And so we might just repeat until we start to get it. But I did want to ask you just some questions so people get to know you. What is your day job these days?
My day job is working on films. I am a set technician.
Mm-hmm.
Yeah. And right now I'm working on Walker, Texas Ranger, a new reboot version of the old one, which is completely separate. But yeah, that's what I do. 13 hours a day.
So it's not like you're somebody that's like, yeah, you know what, I'm working at a bank, or I have a degree in finance or anything like that. You're total independent.
Right. Nothing I say is financial advice.
Yeah, nothing I say is financial advice. It's like, believe it or not, we're just real world. We are totally real world.
Yeah.
And so how long ago did you get interested in crypto and DeFi world and start going down the rabbit hole?
Well, DeFi world for me started this summer, but I've been in crypto since like 2016. And it took a while for me to even get the idea or the concept behind it. And once I did, I just fell in full throttle. But DeFi, they call it the DeFi Summer, is when all these decentralized finance protocols came out and they were just rewarding you for using their protocols nonstop. So it was a great time. It was an interesting time. A lot of people made money. A lot of people lost money. A lot of people got hacked. A lot of people got, part of some really good protocols early on. What's amazing is during DeFi Summer, we were able to get into some DeFi and front run a lot of these financial giants that are now involved in these things. For example, I invested in Injective Protocol, which is a decentralized stock trading platform that's about to go mainnet. And the other day, Mark Cuban just dumped $10 million in it. And I was like, oh, I love beating Mark Cuban to an investment. That's amazing.
So. And if Mark Cuban's going after it, he's such a shark. He doesn't do anything that he doesn't want to do.
Yeah. So it's cool. I mean, I think Injective Protocol was an answer to, or is going to be an answer to, the market shutting down things that we want to trade actively, like GameStop or any of these other sort of Wall Street bet picks, which I'm not necessarily a fan of because I like using these protocols and not just buying and hoping that somebody else is going to buy it at a higher price and then I'm going to sell it to them for. I don't know if that's like I win, you lose, all that stuff. So I just get into DeFi. I use my own money against myself and I make money that way.
What do you think about Coinbase going public?
I think anybody that doesn't really understand crypto but is interested in that sector and wants to get a piece of the action, I think that Coinbase is a good call because they basically sell all cryptos. And a lot of crypto, well, not all of them, but the ones that they deem have enough liquidity, that they trust, that have enough trading volume, and they think are good projects, they put them on there. So if you just want to buy the machine that's selling cryptos instead of crypto themselves, it's like buying the guy that makes the shovels business for gold mining rather than buying gold itself. Yeah, I would say yes. Invest in Coinbase. I think it opened up at 380 and now it's low 300s. I think a dollar cost average on that is really good. I think they made like $8 billion in their first quarter this year. So I don't know, $100 billion valuation is what they were valued at to begin with, but anywhere between 50, 100 or a little more is $1 billion isn't what it used to be.
I know. $1 million being a millionaire isn't what it used to be.
Exactly.
When you said you've got and I'm going to paraphrase this, tell me when I'm wrong, is it you've got your crypto out there working for you? Is that staking?
Yes, I have cryptos right now on Coinbase that offer staking. The ones that I'm involved in is Algorand, which is a smart contract platform, and also Cosmos, which is another one. And Cosmos, I think, gives you 5%. Algorand gives you 6% APY. And right now, ETH 2.0 is offering staking at 6% right now. So I got my money working for me, especially working 13, 14 hours a day. This used to be achievable through your savings account, and now it's not. Mm-hmm. And people are like, they got cash. Some people don't have cash, but they have cash in their savings account. It's not growing. There's no incentive to put $500 away. You get no interest. So if you get on Coinbase and you do all their KYC, AKA know your customer laws, and you go through all that setup process, you can begin gaining interest on your money. When you work all day long, it's awesome having your money work for you at home.
Mm-hmm. Yeah, it's called passive income. Exactly. Passive income, if you're making money while you sleep, is the best way to make money. So can you walk us through the process? And I did a little research on this. You can stake on Coinbase, you can stake on Kraken, you can stake on, and those are, what are those called? Central exchanges? What are they called?
Yeah, so Kraken, what's the other one? There's a few of them. There's Binance, there's Kraken, there's CoinBase Pro. Yes, those are centralized exchanges. You'll see in the world of crypto, they'll call them CEX, C-E-X. They'll call decentralized exchanges DEX, D-E-X. They are centralized exchanges. Now, the beautiful thing about them is staking is a lot like mining, to where you put up something and you get a reward in return. In staking, you put up your money and you lock that in. Mm-hmm. In mining, you are putting your computing power on the line. You're actually paying a higher electrical bill to confirm transactions on the network. But Coinbase makes it easier for you to do that. They do all the hard work for you. They're validators. They run the computers all day long. Then you get to be a part of their pool, and they reward you 6%, 5%, whatever the APY is.
Uh-huh. And so how I understand it, when you're talking about the mining, that's in proof of work.
Right.
Staking is proof of stake, and these are mechanisms to keep the blockchain secure. So if You've got proof of work, somebody is putting their computers, actually the money that they put in to have the computing power plus power to run these, I don't know what you call them, like program, what do you call it?
Bitcoin protocol, Ethereum protocol. What these mechanisms are called consensus mechanisms is what they call them. And so they are trying to reach a similar goal. Now, with proof of work, it works for something like Bitcoin, because Bitcoin is basically, you just transact on the network. I send you Bitcoin, you send me Bitcoin. It's like gold. It holds its value. Just think of it as like gold. So proof of work works well, and it's scalable for Bitcoin, even though sometimes it gets congested when a lot of people are transacting and the fees get a little higher. But you wait a few minutes, you pick the right time, and you're sending lots of money for cheap. Mm-hmm. There's also the Lightning Network, which is built on top of the Bitcoin network, which will send it off chain and then back on chain so that it doesn't clog the chain. The problem with that is, and I don't see a problem with it, but a lot of people do, is that it consumes a lot of energy. When you have a protocol like Ethereum, there's a lot of things built on top of Ethereum, countless applications that can be built on top of Ethereum network. Now, what that does, because Ethereum 1.0 is what most people are using right now, is what you can buy on Coinbase, is still on the proof of work consensus mechanism. Mm-hmm. What that does when you have applications built upon the Ethereum protocol is congest it even further. And it sort of bottlenecks all these transactions that are waiting to be confirmed. Proof of stake does is it makes everything faster, cheaper, and more efficient. Anybody can participate. I think there's a minimum requirement of Ethereum to become a validator of transactions. And you will also, I think it's 32 Ethereum, and you will also need to have a dedicated computer running all day long. The energy that computer takes is absolutely nothing. It's like a small little lamp in your house just on all day long. What it's doing is it's securing the network that you're now invested in.
Which is great, because it's basically I'm using a lot of simpler metaphors, is like you're putting your money in there, and your money is at stake. Your Ethereum, 32 Ethereum. I think you can do it also fractionalized in other ways, but say you put that much money, or you put that much Ethereum in, 32 Ethereum right now is it's getting close to $100,000. So it's not something that you're taking lightly to secure the network. So how I understand it, that's a protection against.
It's double spending. So when you're a validator and you're running it all by yourself and you're diving into the staking, you're staking, what happens is if any of the transactions become invalid or double spent or anything like that, your stake can get slashed.
It's because it's like now we've printed a whole bunch of money and your money is worth half as much.
Yeah, or gone. I mean, because you confirmed a transaction that's the network's, confirmed a transaction that's not real. So you get slashed. That all seems complicated and hard, and a lot of people can't own 32 Ethereum. So buy half of an Ethereum and Coinbase will take care of that for you and you will not get slashed because they will be confirming transactions. They will be doing it the right way. So it is more complicated when you decide to become a validator on your own. It is a lot more money. There you get better rewards,
And are you rewarded in Ethereum?
Yes.
Okay.
Yes, you are. Right. So when you make 6% on your Ethereum, you're getting Ethereum back. You're not getting your dollar value. So if Ethereum goes up and you've made 6%, oh my God, that's awesome.
You might be making 600% at some point.
Exactly. You might, it might you get the double pump, where you're pumping in price, but you've also been incurring these interests and you get that double pump. Same thing when it goes down.
You said last time that Bitcoin is like the gold, Ethereum is like the oil.
Simply because we use oil in everything, and Ethereum is basically used in all these DeFi protocols, most of them.
And that's why transactions are getting clogged up because it's actually getting used.
Big time.
Yeah, which is awesome because if it's getting used, then it's a tool that's useful rather than a speculative concept.
Yeah, it's totally useful right now. Absolutely. They just did a minor improvement to the protocol. So like some of my transactions were super expensive, but now they're not so much. I just did a few trades the other day and noticed that I think they had a hard fork or Berlin hard fork. I haven't really read much about it, but it's improved the protocol quite a bit. And this is just one step into improving its efficiency.
How I kind of understand is the more people are putting their Ethereum up for staking, it's a faster way of validating transactions too.
Yes.
Right. So
you get more people. You definitely get more people involved.
Okay.
What's that?
And then those fees will go down because you've got more. So that's a good thing. When I was reading too, though, so Bitcoin, how it's hedging against the inflation is there's only 21 million ever, and then the amount is halving every 4 years.
Bitcoin's going up in value. It is getting more lucrative the higher and higher it gets, even if the rewards halve, because there's like a chart out there that shows halving events and price at how high the price goes. So there's like this halving event, and then there's a dip, and then the price goes up. And there's a certain percentage it does every single time, and that it does every single time. So it becomes lucrative. Now, the cool thing about mining is that if it doesn't become profitable to mine, what happens is a lot of miners sell all their equipment, right? And they try to liquidate their earnings to pay for everything that they spent on mining, pay their bills, so to speak. And what happens is when there's less miners running in the network, the difficulty level decreases. So when the difficulty level decreases, then it becomes less difficult to mine an entire Bitcoin, which uses less power, which then in turn turns the network back into profitability. So it's self-correcting.
Yeah. It's like a win-win-win-win-win.
So even if it becomes unprofitable at some point, things go down, it still will self-correct itself over time.
And then and this is in about 120 years, once all the Bitcoins are mined, then the way I guess the miners would make any money is from transaction fees, right?
Yeah, I think you'd run a node and run a Bitcoin node and still confirming transactions on that network. You just won't get block rewards. And I would bet that Bitcoin at some point moves to some sort of proof of stake aspect or consensus mechanism. But that's a discussion for 100 years from now.
Yeah, I'm not going to be around.
But a lot of things you can do with your Bitcoin now. You can take your Bitcoin and wrap it in Ethereum, and then you get wrapped Bitcoin.
What does that mean?
It allows you to use your Ethereum or your Bitcoin on the blockchain. So if you don't want to sell your Bitcoin, you can then wrap your Bitcoin in Ethereum, and it'll be WBTC. Anybody can go to CoinMarketCap or CoinGecko and see the market cap of wrapped Bitcoin right now. There's quite a bit of Bitcoin on the Ethereum network right now, which is why I think Ethereum is going to equal, if not surpass, Bitcoin's market cap. Think about that.
Well, I have been kind of thinking about that because I have seen the past week or so, Bitcoin took a big dip. So did everything else that kind of follows it. But Ethereum, had some dips, but for the most part, it's only been going up. And that people are using it and using it and using it, or it is being used as a real tool. I can see it going up and up and up. It's also interesting because then you can use your Ethereum to stake and get percentages on that. But if you are like Ethereum is or in not in my range, but I could use my Bitcoin that's just sitting in my wallet to go out and make more. That's awesome. Because when I was looking up, Bitcoin was only like 0.25% if you were going to stake it. It's not very stakeable.
Bitcoin is not stakeable. Mm-hmm. What basically will happen with your Bitcoin is you get on a protocol that wants to give you a percentage on your Bitcoin. What happens is you give them your Bitcoin, then they pay you to have it. And so they give you percentage of that. And it's sort of like staking, but it's really just interest-bearing checking account. So it's not actual staking because Bitcoin is still proof of work. Now, also what I wanted to mention about staking is anybody that's interested in putting their money to work in that way is that a lot of these protocols will require you to stake for a few months at a time. You have like a vesting period, so you have to keep it in there. So you won't be able to trade it, move it, send it, or anything. You have to keep it in there for a while because the more people staking, the faster the transactions are going to be, the more efficient it's going to be, the less fees that are going to be to use the network, and the more decentralized it's going to become. Mm-hmm. Now, another issue with staking, and they're not issues, they're just points of interest. But another interesting point about it is the reason why people like proof of work over proof of stake is one, it costs real world energy to confirm a transaction on Bitcoin. And I think Jim Maher or Bill Maher, I guess on HBO, had a kind of just talking negatively about Bitcoin. And he was describing how much energy it uses. And out of context, it seems like Bitcoin uses a lot of energy, but in reality, compared to our fiat system, compared to the US dollar all around the world, compared to everything that's happening with the US dollar, it's just not even a drop in the bucket of how impactful our monetary system is on the planet itself. So if you want to actually compare, then a lot of arguments about Bitcoin too is that it's used for illegal things. Mm-hmm. 98% of illegal activities are done in the US dollar in cash. Terrorists are not accepting Bitcoin.
Yeah, I remember hearing about hackers holding, school or hospital computer systems hostage until they were paid X amount in Bitcoin. So we've all heard those stories.
Well, they get caught. Bitcoin is a permanent ledger. So you're knowing what transaction is going to what transaction all the time. That's another issue with Bitcoin is that it's not very private. People think it's the secret internet money. It's not. It's out there. If you're running a node on your computer, you can see all the transactions that are coming through. Your address is paying this guy's address. It's like Venmo, like you see what all your friends are doing. So it's not very good for crypto. As a matter of fact, what it would be really good for is campaign finance. If every single president or anybody running for office only accepted campaign money in Bitcoin, we would know where all this money's coming from. We would know who's connected to who and who's paying who. And
money laundering is impossible, and you cannot go back and change any of the ledgers. They're written in permanent.
Well, there's just so many people getting caught right now trying to launder money with crypto.
Yeah.
And the US dollar is still the number one currency used for illegal actions. Kind of got off track there.
And this was all going to be about staking, but that's okay because I love to go in different directions and it's fun. So just to recap about staking, Ethereum is probably your number one proof of stake protocol, right?
Ethereum is barely entering the proof of stake world. And what they need to do is have a bunch of people staking on Ethereum 2.0 for it to work. I think they've reached that goal. Mm-hmm. Once Ethereum 2.0 comes out, which I think it's going to happen in the summertime, then yes, all those rewards will come into your account and you will reap those benefits. But other protocols have been doing it for a longer period of time. Tezos, Cosmos, Algorand. Those are on Coinbase right now. You can go there. Their market cap is significantly lower than Ethereum. Their protocols are just as good. I would say Cosmos is really good. The thing about Ethereum is that it has a network effect where you have tons of developers already working on Ethereum. And in order to get that network to all those applications to migrate towards another chain, it's just like, let's just make this one better. Let's just make Ethereum better. So that's not to say that other protocols won't have a significant chunk of market cap in the crypto world or a significant power. And I think Cosmos is one of those.
So if you were somebody brand new, say, okay, I'm going to go to CoinBase Pro, or no, probably, I don't know. Can you stake on CoinBase Pro, or is it just on Coinbase?
I don't think so. I think it's just Coinbase.
That's the trading. So let's go to CoinBase Pro. Coinbase.
Yeah.
Move your money from your bank account, your US dollars, to Coinbase, walking through the steps, buy Cosmos. I don't know what it's trading at. I think it's like $23.
Yeah.
23.
I think it's like $5 billion, $6 billion market cap, maybe less, which sounds like a lot, but in crypto right now, it's.
So buy that. You can buy $100. You get 4 Cosmos.
And you can immediately stake it. There's no minimum required.
Immediately put it out there and start earning, what is it, 12%, 7% on it? It's
something, and that's important because you don't get a lot from traditional banks right now. But yeah, I think it's 5%.
Okay.
And I think Algorand is 6%. And I think Tezos fluctuates from like 4 to 6 or something like that. Pick which one you like. The cool thing about Coinbase is that you can drop down, pick any one of these and read a little summary about what these do. Also, Coinbase has a lot. I don't want to do a Coinbase ad here, but they have a lot of little Coinbase earn and learn and earn type things, which I think are great. And a lot of new people I've gotten into Coinbase really enjoy that. And they text me, they're like, hey, we can earn this now. We can earn this now. And then I just go earn like $3 and it's a fun game. It's a little quiz and you take it and you earn $3-4 of certain, cryptos. Knowledge is power.
Yeah. And I looked at that. I want to do it because I like learning, and it's like, oh, look, a reward. They call them rewards.
Yeah.
Reward. Yep. To wrap this up, and you kind of were saying this just now, when you first started getting interested in it, how long did it take you to start talking to people about this?
Well, not long. So 2017 came up and I had been telling everybody about it because I had gotten so into it. And every time somebody had an issue, it seemed like crypto was the answer because I was just so into it. So I would tell them, I was like, you know what? You need to learn how to own your own money. You need to do all these things. So it didn't take long. And the funny thing is that when I told everybody, or as many people as I could in 2017, they bought the top. So a lot of people bought Litecoin at 250. A lot of people bought Bitcoin, at 17, 18,000. A lot of people bought the top. And so when it crashed, a lot of people were very mad and upset. Mm-hmm. And a lot of people actually weren't buying Bitcoin and Litecoin. A lot of people were buying XRP. And the reason they were is because XRP was connected to the central banks as a way for them to settle international payments. And it's like, that's what we're trying to get away from. I think the learning curve for understanding the concept is really quick. And then it's just a longer curve to understand how things work and how to make it work for you. But a lot of these protocols are making it a lot easier, like Coinbase. Mm-hmm. You don't have to learn about being a validator or getting a computer and downloading a node and all this stuff. You don't have to learn about that. It's being done for you. Mm-hmm. And that's another reason Coinbase is a good investment vehicle, or an investment to buy into as well, if you don't want to buy Bitcoin itself.
Do both if you're into doing both.
Absolutely.
Yep. Cool. Well, Carlos, I love having you on Sundays. Let's do it again.
Awesome. Thanks for having me.
Thank you. I'll see you later. Take care of yourself.
You too. Bye.